Hello guys. Hope you are doing good after Christmas. This is the last week of the year. Hello Trump, how are you? You are the first. I don't see anyone watching and you are the first. So I don't know if you are like hidden or something like that. Now, so we'll be just waiting for... Yes, it reverses this these 2 days or 3 days, but still no one knows, because this I will explain later when the guys come. You say Warren Buffett is always right. No, he doesn't care about what will happen in the market. I have explained this many times. Okay, he get dividend from his stocks. He has, I don't know, maybe 50 billion or 40 billion dollars. He doesn't care what the market is doing, because he is looking for 20 years, 30 years, 50 years, 70 years, all his life. Okay, so he's not looking for no, man. Trump, I'm telling you something. Don't be so optimistic about this. Okay? We are in a bear market right now. I will explain later when we have the chart. I will explain to you. So it doesn't mean that 2 days are good. It means that that the market is good. No. Mutual fund will never buy. I'm telling you. This you will understand later when I'm explaining. You will understand my point. Don't judge the market because of 2 days. Okay? Now, hello Nasa, how are you? We will soon go to all-time high. I don't know. What is this to all-time high? We are in the year 2000 low. So why you are speaking about high? It's not yet. I always listen, Trump. No, you say no bear market because you see the good 2 days. But I will explain later what will happen, and there is no confirmation yet. So it's not because 2 days the market has reversed. I will explain this. Yes, it could reverse at any time, but I will show you when we have enough guys, because we're just the beginning. I will show you what's going on. Okay? And the end of this year. So we have Monday left. If Monday is a good day, like 500 points or 1000 points, and the market is good, we enter again to the correction era. That's it. But we are not in a bull market. Bull market is later, when we go over the high of the year, which is I think 26,000 something. I showed you always in my chart. That is the bull market. But right now, it is not. Don't be putting all your money now, and then on Monday we have a very bad day and you lose all your money. Okay, that's why I'm telling you, you should wait. The big trend has not showed yet. So don't anticipate. If you want just to predict, yes, it's okay to predict, to say yes, we will be in a big trend. Yes, it's okay, no problem. Adolfo Del Rio, hello, good evening, how are you? Trump said, just look to SPY since 1940, always cover even the crisis and wars. No, this has nothing to do with the SPY, with Dow Jones. Okay, it has nothing to do with that. We have a correction. if we have a bear market next year, we will have it like 2008. It's just each 10 years or something we have bad year, or 2 years. So it has nothing to do with history or with whatever. But well, yes, if we have it, the bull market, I will show it to you when it comes, but it is not yet. I have explained this many times during the whole year, and I will explain it when we have enough people. Artkov, hello. I didn't see you many times. Artkov, Nasa, Adolfo Del Rio. Thank you very much for coming. Trump said, what are you think? It means, what do you think when the president says, yes, because he has the stocks and his stocks wants to go up. That's why. The president is looking for his money. He doesn't care about anyone. He's looking for his money. But Wall Street do what they want to do. It's not the president, they stop the stock market. Understand that politics has nothing to do with the stock market. Okay? And the president can't ask Wall Street guys to buy again the stocks and to have a bull market. This is a big manipulation. He will never said that. Okay? Well, what he said, the president said, if you impeach me, if you get me out, it means his friends Wall Street, they will it means punish the investors, and we will have what we call a bear market. This is what he says. But understand that our president or anyone cannot decide for the market. If he can decide, why he let a bear market? Okay, he can't decide. He can't manipulate the market. Okay, and he can't ask mutual fund, oh, just go and buy stocks. Now, the government is looking for money from bonds. This you don't understand. Bonds, it means you lend your money to treasury, federal treasury, or to municipal cities, or to the states. You want to give them money. So this is what some people like. They like bonds. That's why if the market, if mutual funds are buying bonds, it means there will be a bear market. And this will continue, because people, when they see that they lose a lot of money in stock market, they begin to think about bonds, and the bond market will be growing very good because of the interest rate. It's the government who have done this. They see that the market 10 years is doing so good. So there is 1 year that the bonds will be doing good, because when you raise the interest rate, people are interested in a fixed income better than stock market when the stock market is going down. So understand that it is a lot of stuff is coming, but interest rate raising will affect the stock market, and this is the problem. This year, 4 times they raise the interest rate. 4 times. Now you can check. If you want, for example, to buy a home, okay, or just go to banks and check the interest rate, you will find it 5, 6, 5.30. It means the market has been going so good for the business, the banks, and the other stuff. They will be making more money, because when you want to buy a house or to refinance, you find that the interest rate is so high. So these guys will be making more money. So that's why, and this is in one time. The second thing I'm speaking about is the bonds market. Bonds market will be a bull if the market is in a bear market, because they have a link. Okay? So Trump said the market will crush aggressive sellers and buyers. Yes, yes, because these, especially these following days, the market is very volatile. That's why I told all my guys who are working with me and who are following me to do day trading, because one day is good, one day is bad, one day is good, one day is bad. So you should be clever and take this opportunity to day trade. You should not do a lot of swing trading right now, because the market is so volatile. This is what I say always. Okay. Wiseman, he said, hello Karim, happy new year. Thank you very much. We are not in the happy new year yet, after the 1st of January. Now we are in Christmas times. Hello Clown with Twitter account, how are you? So as I told you, okay, these 2 days were so good, but don't be influenced because of 2 days. The market can collapse again at any time. So do not buy heavily and hope that the market will continue to go up and up, to go to the correction and then to go to a bull market. Yes, you can do that, but you are just predicting things. So if your prediction is wrong, you will be losing a lot of money. So you can do whatever you want. Cloud Twitter account said we are on the downstairs market, will consolidate to go down or up. This is very, very known for, this is what I am explaining always on how the market works, the downtrend and the uptrend. Because the people, they don't understand why we have this, why we have many days going down and then few days going up. And then if we have many days going down, this is how the downtrend work. And the opposite for uptrend. Uptrend is many days going up, 1 day or 2 down, and then many days will go up. This is how the uptrend work. Okay? Yes, we don't know. See, there is a suspense. So when you do a commitment and you go long because of these 2 days and you think that the market is strong, this, okay, if you have an opinion, you do it. It's your money, you do it, it's over. Omar Hamdi, how are you, Omar? Thanks to come. Adam said, Facebook is a good buy at 120. I was watching all week, trying to good up to recover little from its bear. Now listen, Facebook and Twitter, Apple have been hit so badly. But understand that they follow the market but harsher. Why? Because they are volatile stocks. Understand that Facebook, Apple, Twitter, and the other stocks, when they go down, they go so fast. Now, when they go up, it's so fast. But the situation of the market right now is very, very dangerous. The market can collapse at any time again. And maybe you see 1,000 points down for the Dow on Monday or on next week. You might see that, or you might see the opposite. That's why for me, I make some day trade with Twitter, with some ETF, and I showed my guys how to deal with day trading and how to use ETFs. And this is the way the market is volatile. Okay. And people, whenever they see 1 day or 2 good, they think because of the CNN and because of these TVs. Okay? They just see something and they begin to focus on the day. They don't focus on the trend. This is a real problem. Because when they say to you, oh, it's good, you go and buy long. But who tells you that, that this will continue? Facebook, Twitter, Apple, no one knows. If in the following days, next week or so, if the market is still strong, you might go long. But right now, I'm looking very, very closely to Monday. Monday is the last day of the year. Either it could be excellent or it could be bad. So be careful of that Monday. For me, I think Monday is good for day trading. Okay? Day trading is very good. Either the market is down, you sell short, or you short with ETFs, or if it is good, you go with the long and you can make a lot of money. But be careful. Don't have convictions before it comes. Hello, Nasir. Oh, today you show yourself, because last time you say bye at the end of the hour. You are just listening. Thank you very much, Nas Dolanucci. The Crypto Drum said, hi, how long do you hold the position for? Now listen. This year it was a very rough year. There are not big trends. The only big trends, it happens 3 months. And some stocks have been going 3 months, like Apple, Facebook, Twitter before. But there is no more. So each stock is different. But the market, the mood of the market stops everything. Okay? Stops everything. So each stock is different. But in general, there is only one I see with 3 months. Facebook, Apple, and Twitter. I was in them in these 3 months. They were so good. But later they collapse. Everything collapsed after the market collapsed. So the Crypto Drum, if you are looking for trends, you should wait until we see, are we in a bear market or are we in a bull market? Right now, we're still in a bear market. We don't know if it continues to go down or it could go up again. Okay? So my opinion, stay out from swing trading these days or this month. At least we see. Now, if you want to do a trade, swing trading, and you think that the market is good, you do it, but put stop loss. Whatever happens, it means bad. You should exit early and you don't lose a lot of money. This is the main thing. Okay? Let me drink some. So Clown's Twitter account said, not all stocks go down during the bear. Some go up. Facebook could beat the market if they expand more. Yes, listen. In order to do what you say, is you should have a commitment and you buy whatever price you see good and you have a commitment. But understand that the whole market is troubled. And people, day traders, they like when the market is troubled because we have opportunities to make money daily. If the market is so strong, you go long, you make money. If the market is so bad, everything is going down, you just sell short or short ETFs at any time of the day, you will be making money. Okay? So, day traders, they are not thinking about Facebook or Twitter or any stock. It doesn't matter what is the stock. So, if you are a day trader, you should think about the day. Don't think about the trend. The trend just gives you an idea. For example, if the market is still going down, you have an idea that shorting is better. Idea, just idea. But you should see the stock in the morning at 9:30 and you should follow the thing and you should see if it's good or bad. Okay? So it doesn't mean that the market is going down, then you go in the morning, just you short any stock and that's it. No. If you are a day trader, you should look up the price and follow the price. Clown Twitter account said, Twitter is limited and Apple is selling very aggressively iPhones. No, listen here. Stop thinking about selling iPhones or no. Stop thinking about that. Because the company is making money. Facebook is making money. Twitter is making money. Apple is making money. This has nothing to do with the stock. Because you are always confused about a stock and the company. Right now, okay, go and check, for example, the quarters. Facebook is always making money. It has nothing to do with its stock. Its stock is going down because they want to short it. Because mutual fund, they want to sell everything, maybe buying bonds, because they have a lot of profit. Short sellers, they do what they want. It means Wall Street, when they want to go and short big stocks, they make a lot of money. They don't care what this company is making or it is selling or not, because there is no relation. I have explained this many times. So don't confuse yourself. Twitter also. Twitter is making money. That's why it is in business. If it doesn't make money, it will disappear. Go and check how many. Yes, Twitter is a small company. It's not a big company. We understand that. And it is making money from the ads, like Facebook. But, you know, Facebook is stronger and bigger. So, do not try to mix a stock with its company. Except when the company is going too bad, is doing too bad, because the earnings are going down and down and down and down. Like I have showed you, General Electrics. It is the business itself is going down. There is no money. They don't make enough money. That's why the investors, they flee. They sell and they go to another stock. But understand that the situation of now is the whole market. Does it mean that the whole market, that the companies are not making money? No, they make money. But it is the stock market stocks. It's not companies. Okay? So try to take this idea about a stock and think. Now, before I continue, I have a question of Wiseman about day trading. I will answer that. So please, I will just explain to you this idea about stock and its company, and I will show you examples. Okay? Now, let's go to explanation. Okay? So the paint, let's see here. Okay. Hope it works right now. Ah, yes, it works right now. So please, all of you guys who are here, I will just give you an example. Okay? And then you just try to understand what's the difference between a company and its stock. Okay? So, now let's take an example. Okay? Now, Facebook. Now, Facebook is a big company. It makes a lot of money. Now, this is the company. Here is FB is the stock market. This is the stock market. Now, understand that there is some relation, yes, but in the stock market, okay, Facebook was going good, it stops, then it goes down. Okay, this is the stock market. Now, Facebook earnings are going up and up and up and up and up and up. It has nothing to do with this. So Facebook is making money. Look at the earnings. Look at the earnings from year to year or quarter to quarter. Okay? What makes Facebook go down is the whole market mood, is the mood of the market. Okay? Wall Street guys want to put everything down. These are Wall Street guys. They don't have shares. They just sell short the shares, and the whole market is going down. Now, if you look at the Facebook company, you find that the earnings is going good. Mark Zuckerberg is making money, so there is no problem. Now, take another example of Apple. Apple is making sales, and the earnings are good. Why? It's going down. So from now on, try to separate the stock market from the company itself. Now, I'll give you an example. Almost all the stocks are down. Does it mean that they don't make money? No. They are making money, and sometimes they are making more money for this quarter than the quarter of last year, but still, the stock is going down. This is because the stock market is the game of Wall Street. The game. It's a game. Here, it's not game. Here is the true Facebook. The true Facebook, it means you go to the company, you see the earnings, and you see what Facebook is doing. Is it making more money or less money? Now you will find that Facebook is making more money. So this is true. So Mark Zuckerberg is not worried about the stock. And he can do nothing to the stock market, to the Facebook. He doesn't come and buy from the dip, buy and buy. No, he is not interested in the stock, because stock, it is in the hands of Wall Street guys. That's why the whole market is going down. It's because of them. Now, another thing that I would mention, and you should understand, is this thing. The thing is, stock market was going up, it stops, it's going down like this. Okay. Now, two things. First is the interest rate. Interest rate, understand that the Fed, okay, the federal treasury has raised interest rate, it means raised it 4 times this year in 2018. Now, what does it mean? It means that when you want to have a loan, the loan will be expensive. Now, in years ago, in my broker, my margin was 1.99%. This is the margin that options house give. It means it is so cheap. Now, I find one of my students, he told me that he is going to have the margin of 9.25. You see that? 9. It means if you have a long position, your broker will take a lot of money from you as interest rate. Okay? Now, let's see another thing. Now, the second thing, this is interest rate. Second thing is the bond market. The bond market, okay? When the government raised interest rate, So these bonds will be giving, let's say, 7% or 8 or 10, or it means it is attractive. It is attractive. So what the mutual funds will do, mutual funds are here in the stock market. What they do if they see the market is not good, they will sell part of their stocks and go here and buy these bonds that are treasury bonds, treasury, or state, or city, municipal city. Okay, they will buy bonds, because they will not lose money. They will make money through the years, 1 year, 2 years, 3 years. If they get 8%, it's better than now they are losing 5% or 7 or 8%. So they say to themselves, we try to do to make the money again. They don't care about the market, what you will do in the future, next year, but they are caring to make money from the bond market. So this you should understand. Now let's go to another thing, what I explained before I go and I answer your questions. Now listen, please. There is a line. This is the correction support line. This is the correction. Now we say that the stock, let's take this, and then it was doing like this, and then it goes down. Okay, this is what happened. Now these 2 days are very good, and today we have a small candlestick near. This is today. Now this is the low. This is the low of the year, because now major indexes are losing some money. 2018. Now this is the low. Now either it goes up next Monday and we will be in the correction again. This is the correction, as I told you before, correction. Or it will collapse like this. So you should expect some big thing. I guess, this is my guess, a big thing in Monday. Either we are going to a bear market, or we go back to the correction and then we go to the bull market. This is how to know the market. If it goes up good and it continues, it will be a bull market. Now you can buy stocks and you will make a good year next year. But what if the market reverses again and collapse and go down and down and down? The stock market will lose a lot of money. So this is my explanation. Please, if you have to draw this and put this as the plan for the future. So we should wait and see Monday, and then we see. Okay, so let's go to your questions. Before we go, let's drink some coffee. And please, I see a lot of questions and a lot of inquiries. Please, as usual, I always go one by one and I explain. And if you have more questions, you just ask. So I will be going to other questions. So as he said, Adam, or Clown with Twitter account, said, Twitter is limited. Apple is selling very expensive iPhones. Now, as I have explained to you, Adam, Apple has nothing to do in the stock market as a stock. Has nothing to do with selling iPhones. It has nothing to do with that. Because, tell me right now, in these 2 or 3 months, Apple is going down. Is it because they are not selling iPhones? They are not making money? No. They are making money more, maybe more than before. Okay? So be careful. Don't mix a company with its stock. This is, I just explained and hope it is clear for you now. Another question from Wiseman said, Karim, you started out as a day trader, if I remember correctly. Yes, that's why I told you I have made 2 day trades with the chart that I use, although the chart is not very good for day traders because the information is low. So I use the price for with my E-Trade. I use the chart because it is more accurate, but the way the chart is not, I don't like it. I try to put the lines. It is very time consuming. With the chart I use, in the morning I just put lines and I will wait when I enter and when I exit. I have put 2 trades, one with Twitter and one with an ETF, and I posted them in the golden subscription and silver subscription. Now, and I like day trading because in the morning you can expect anything. Sometimes the stocks, the ETFs, the stock market is going up very good, and you buy and you think that it is a good day, and then after 10 minutes, 20 minutes, 30 minutes, if you don't exit, it will be reverse and go down again, and then after 1 hour, 2 hours, it will go up again. So there is a lot of play. So if you are a day trader, you should be there in the market from 9:30 to 4 o'clock and watch. If you have alerts about a price, you should use alerts to check with many stocks. But for me, try to stay with 1 or 2 ETFs or stocks, and don't confuse yourself, because you need to concentrate a lot in day trading. It's not like swing trading. Swing trading, you see the trend, you buy and you leave. But in day trading, you can't do that. The price can reverse at any time. So you should be as quick as possible. Second thing, you need to have more than $25,000 in order to do a lot of trades. Because let's say you have $20,000. Okay, you do a trade at the beginning of 9:30 and you lose some money and you exit. Now if you want to enter again, they will tell you that the settlement of you should wait another day, the second day, and then you can trade. Or if you do a lot of trades, more than three trades, and they will ban you, or they will stop you, or they will flag you because you are a day trader. In order to do a day trader, you should have more money, more than $25,000. At least if you want to change, you have no problem changing. You buy and you sell, you buy and you sell, you buy and you sell. You can do 2 trades, 3 trades, 4 trades a day, whatever you like. If you missed, you lose little money at 9:30, you are mistaken. At 10 o'clock, 10:30, if you see another trend, you can enter again and you do again. So you need to have money. If you don't have money, you can divide your money, and you can do 3 trades only in the week. In 5 days, you do 3 trades. If you do 4 trades, they will stop you. Okay? So understand that people who don't have money, they always have problems. And understand that the day, it's not when you just 9:30, you will find that the day is good and you just buy, and at the end of the day you sell. This is stupid. The market doesn't work like this. It could be going up for 1 hour, half an hour, 10 minutes, up. You buy, you think it's good, and then it stops and go down. If you don't exit, you will lose your profits and you begin to lose money. So you should be quick in taking decisions. you should have money to enter and go out very quick. Okay, that's why day trading, you should be prepared and prepare yourself, plan a plan, and you should have money and not to be flagged if you have less than $25,000. Okay. Clown with Twitter account said it was bad news about Twitter. Andrew left. No, listen, this is not about Andrew or about his wife or about his kids. All the market is down. It's all down. Now, Wall Street, when they want to short sell stocks, they don't care who is there. Okay? You see all the stocks are going down. So it's not because each company, the president of the company, CEO, quit or get fired. No. It looks like stupid if you think like this. If you think that the news will affect all the stocks like this. No, it doesn't. We have a new guy here, Ibrahim Abdul Qadir. Thank you very much, Abdul Qadir, for coming. What do you think about market? Is it going down again? Listen, I don't think. I told you wait on Monday. I just showed you Ibrahim Abdul Qadir. I will show you again, just 1 minute. I will show you again Dow Jones in order to understand. Okay, so let's go to Dow Jones very quick with a chart. Okay, now look at the chart. Look at here. This line here is the correction low. It means the blue line, the resistance line, this is where the correction. And if you don't know what is the correction is in the beginning of the year, when at the end of January, the market go down. You see, in few days, 9 of February, this is the end. This is the low of the correction. Correction is just when we have a nice many years good, we expect that the market go down. And it has been going down. Now, this line is very important for the correction. Now, if we are between the blue line and this red line, it means we are in a correction time. If the market going up like this, above, we will be in a bull market. If it's going down, we are in a bear market. So right now, according to me, we are still in a bear market. Now, if Monday, there is a green candlestick like this crossing this line, what does it mean? It means we are going to a bear market. And the market will go up, It might be crossing this line, and then we will have what we call a bull market. But we can't decide. We don't just say, oh, I predicted the market go. No, you should see day by day. That's why I said I say you should do day trading. So we are waiting for Monday. This is the last day, either good like this or bad like this. Either we go 1,000 up or maybe 1,000 down. This is the end of the year of 2018. If we are still alive, okay. So that's my answer for you, guy Abdul Qadir. Now, Clown Twitter account said the market bounced 1,000 points. It must be something secret. No, I did explain to you that short sellers are buying back. That's it. You don't understand what I'm saying? Why the market bounced? It's not because there are mutual funds buying. No. For me, it is no. It is to cover back. I will explain this again. With explanation. Just to get an idea. Okay, let's go to the explanation again. So please, guys, listen. I will explain again. Now, the market was, let's say, was up a little bit, and then we have many days. This, what is this? All these days, as you see, candlesticks are selling short. Do you understand what does it mean, selling short? Selling short, I told you, it is to borrow shares. To borrow shares from your broker. You borrow them here. Then you sell these shares. They are not yours. You don't own these shares. Now here, you buy them back again. Buy back. And you give them to your broker again, because they are not your shares. The difference between this and this here is your profits. That's what happened to the market. 2 days. Now, today the market is low little bit. So we will never know if there are buyers, true buyers, not selling short. It means day traders who buy, or swing traders, or anyone who buys. The market could go good on Monday. Now, if the short sellers want to do again another game like this, they will do it again. And they sell short from the top here, and the market will be going down, and we will be in a bear market for true. Okay? So that's it for the explanation. And this is what I see. Now, if you think there is something else, you act on your opinion. Because for me, what I see, I can only trade what I see. I don't trade. You tell me, oh, what do you think about Monday? Is it up or down? How can I know? How can I know? No one knows. It's the market. The market will not send you an email say, oh, Wall Street guys, they said to you, okay, Monday we are up, so just buy from Friday. This is stupid. Because this is what the majority of traders in the world, they will do in our market. If all they like to sell short, the stock market will be going down for sure. Whatever you buy, it will go down. But what if on Monday they all like to buy? They are optimistic, they want to buy. So the market will be up. Okay? So all this has to do with traders themselves. It's not just you just have an opinion that the market will be going up. Okay, if you think so, you buy stocks for long, and that's it. Now, another Adam said, the market bounced 1,000 points. It must be something secret. No, this is the secret I'm telling you for many months. There is no secret. You sell short, you buy back. It's not a secret. This is what I see. It's not a stupid mutual fund. Everything is going down, he will go to buy. He will be crushed, because if a lot of mutual funds are selling to buy bonds, he will be crushed. Okay? And understand that the mutual funds are worried also. They see the whole market is going down into a bear market. They are worried. And they have a lot of assets in their hands. So they should diversify their account, their money. They should diversify. Okay? So, because if they don't diversify, they can buy put options also. If the market is still going down, they can make some money. At least they hedge. This is called hedging. Okay? So there are many ways they can do. But at the end, it is not their money. This is what I always told you. It is not their money. It means even if they lose the whole year, they are paid millions of dollars, these guys. Okay? They are paid millions of dollars. These guys are are not paid $100,000, $200,000. Okay? And I showed you one time, one guy, he made $3 billion in 1 year as his salary. $3 billion his salary. There is no one in the whole world that can make $3 billion as a salary, except those who have richest, they are very, very wealthy, like Warren Buffett or something. But this guy, it is only his job. He doesn't own any stock in the stock market. Maybe he doesn't own, but he manages the account. So understand that these guys who are mutual funds, they are scared, as we are scared. Because if they succeed to make money for the fund, they will get a bonus. They will get more money because they have a percentage. They have a percentage of the profit. But if they have a loss, they will take only their management fee. It could be some millions of dollars. That's it. They don't have a profit because why? Mutual funds, they go into mutual funds in order to make money from the account itself. Okay? Now, Adam said the market is troubled because too many short sellers, they will be crushed. Now, you will never know. Listen, the best short sellers are the day traders. They don't care what happened tomorrow. They care about what happened today. So all their world, all what they see is they see today. If they see that the market is all red, they just go and sell short. But they don't sell short with 200 shares, 500 shares. These people are selling millions of shares. That's why they can make a lot of money with the bad days. Okay? And it is not their shares. It is other people, it is investors' shares. They just borrow them. And they should buy back them at the end of the day. Okay? So they are not expecting what to happen tomorrow. They don't care. At 4 o'clock, they get their money, they go home. Or if they are home, the end of the session, it's done. That's it. Okay? So understand this, what's going on, to understand how the people are making money. Now, me, myself, and I, thank you very much for coming. Hello, Karim. How are you? What should the market have to do to become a bull market again? Now, I don't know when you come, but I have just explained this. But I will give just a few seconds explain again, because I don't know if you are here. I have explained this before. So let's go to the chart. Now look at the chart. Okay, just to make sure you understand. Now this is the resistance line, the high of the year. This is the low of the correction. When the stocks are going down, let's see here. When the stocks are going down, it stops at the 9th of February. This is where it stops and they go up again. So this is called the correction. Now you ask me how it will be a bull market. Now, right now, since it goes below the what we call the correction line, we are in a bear market. This is the low of the year. Now, on Monday, either we go up to a correction time or it goes down to the bear market again. Now, how it will be a bull market is when the stocks are above the resistance line. If the market continues to go up for 3 weeks, 4 weeks, 5 weeks, and crosses here, it becomes like, okay, just a minute here. Here it becomes like we continue this trend that we had before. See, this trend, it comes here and it continues. All this is a correction. But the problem is that Monday or the following weeks, it will tell us if stock market go down, it will become a bear market. And we continue in bear market until we go to this correction between this red and this blue. Now, in the future, okay, if it goes above this resistance line, we have seen this here before, okay? We have seen this here, but the Wall Street guys want it to go down again. So put this chart, put these lines as I showed you, and you can leave it like this, and the future will tell us what will happen. So that's why for me, I like to do day trading more than to do swing trading, because the trend is not clear yet. It could be like this, it could be like this here, it go up, it go down, go up, it go down. Okay, so be careful, guys, when you are following. Now, let's see here. Let's see. Let's continue the questions. Okay, as I told you, for guys, when I'm explaining, I try to answer every one of you guys who have written in the chat room, and I will go the first come, the first served, as they say, and I will continue down and I will explain to you very quick. Now, me, myself, and I have answered your question. You say, hello Kareem, how are you? What would the market have to do to become bull market? I have explained to you, when you see the market above the blue line, the whole market, most of the stocks will flourish again. Okay, because everybody will be going to buy, and all the channels, they say, oh, it's a bull market, and all the people, they jump and they buy again. Okay, so this is what I say to you. Now, Adam said shorting the morning and sometimes long in the afternoon. No, it doesn't. Listen, shorting or going long, it depends on the day trade that you are doing. You could sell short in the morning and go long in the afternoon, because day trading is about short trends in the day. It could be in the morning, going up, you make money. Going down, you make money. But sometimes it doesn't last that much. 10 minutes, 20 minutes, 30 minutes, and then we have a reverse. Then maybe 1 hour, 2 hours down, and then maybe 1 hour, 2 hours going up. So you should be a day trader and following the price and make a decision and buy and sell as you like. So you should not have this commitment just to buy long or to go short, and you go shopping, or you go out of your desk, you don't put stop loss, and you go outside, or you go to work and you say, oh, let it be what it will be. No, this is not day trading. Day trading, you should, when you buy, you should be there and you watch your stock. If you make money, you see some money, you just snap it. Okay? And this, you can do it when you buy a lot of shares. If you buy 100 shares, let's say $1, you make $100. But if you buy 1,000 shares, okay, you will have $1 in 10 minutes, 15 minutes. And whenever you see good money, you just snap it. This is how we day trade. It's not you just buy long and then you go shopping, you go outside, or you go to work, and before 4 o'clock you want to see what's going on. This is not day trading. Okay, so be careful of day trading. Is very specific. It's for people who have some money to day trade. It's for people who are quick in decision, who change their opinion as the price move. If the price is going up, okay, you go with it, you make some money. Whenever it's begin to go down, you just exit and you have made money. And then you see the stock, is it continue to go down? You short it. This is how the people work. It's not you go long for one day, in the morning at 9:30 you buy, and then you come at 4 o'clock and you see what your stock has done. No, this is not day trading. You are confused and you will lose a lot of money if you do that. Okay, so the crypto drop said, I love leveraged ETFs. Do you sell puts during bear market? Yes. Now, I like also leveraged ETFs, but understand that you can double or you triple your profits, and you can double or triple your losses. So be careful. And I like them better than puts. Put option or call option. I like these ETFs, leveraged ETFs, because it gives you an edge, and if you know how to trade, you can make a lot of money in little time. Adam said, is Trump telling PP to buy the dip so he can sell on the high? No, listen. Trump, now first, telling PP, I don't know what is PP, to buy the dip. Listen, no one knows that it is a dip or not. Second, Trump has many stocks in the stock market, and he is not that interested in making money from the stock market. He makes from real estate, from his University of Education. Okay? So he is making money from real estate. He is a real estate guru or genius. Okay? So his money is coming from other kind of business, not stock market. But you know, when the market is good, it is good for him also, because he will make more money from his stocks. But he is not a day trader or swing trader that he buy today and he sell tomorrow. So understand that. Okay? I don't think that he has time to do this. Now, Adam said, we could go to 40 or 50% correction. No, this is not a correction. This is a bear market. Because for me, I don't put percentage for bear market. The correction has a percentage and it is specific. I showed you, you can calculate it. I didn't calculate it. Okay? From the high of the correction to the low of the correction, I didn't calculate this. Okay? You can calculate it and see how much. But when you say 40 or 50, this is a bear market like 2008. The stocks lost 50%. Okay? And I don't think that it lose more than that, because the government, the IRS, and the Security Exchange Commission has put guidelines to mutual fund not to sell everything. Because if they sell everything, the market will be zero. And all the people will lose their money. Okay? So, the Social Security Exchange has put limits. Because this has happened before. And I will tell you just some information just to understand how this works, just to before we go and do something else and answer other questions. Let me explain this now. So the Dow Jones in 1929. Okay, it was going so high, it reached around, I think, $35. Now it goes down to $40. You see? Now, why it goes so down? And we can see that that the percentage is so high. Okay, is so high. So if you can see 1, 2, 3, 4, 5, 6, 7, 8, 8, 9. Okay, let's say the stock market goes 90%. Now, why it goes so bad to 90%? Do you understand what does it mean 90%? Let's say we have in the stock market, we have let's say 100,000 or 100 billion. 100, it's not 100 100 billion. It's not that, because 100 billion is only Facebook has lost in the thing. It has lost 100 billion in one day. this is Facebook. Okay, one day it lost 100 billion. 100 billion dollar. Billion. You understand? It's not 100 million. It's not 100 million. It's 100 billion. This is only Facebook. Okay, FB. Now, what does it mean 90%? It means that all the money of the stock market is wiped out. Let's say you have $100,000. You have only 10K. After a few years, we have only 10K after $100,000. You see 90%, what does it mean? Now, why did it happen to go to nearly 90% or 85 or 9? Why? It's just because Social Security Exchange Commission, it wasn't there. It was made in 1934. This organism, it's a government organism. It will stop the market from doing what it does before by having mutual funds. It gives them rules not to sell everything. I don't know how much they can sell in stocks, but they have always to have certain percentage. Let's say 80%, for example, stocks. So they can't sell out of 80% down. They can't sell any stock. That's why the market in 2008, we lost only 50%. We can't go to 90%. If they let them, the people they sell, it can go to 90% or 95%. So this is to make sure you understand that our market, for example, Warren Buffett, an example. I just give you an example. With Warren Buffett, he doesn't care about the market. At that time, he has, I think, 195,000 a share for his stock, 195 in 2007. Okay, in 2008, it was only, I think, he has $95,000. Now, he lost about 50% of his money. But he is not worried about that. Why? Because he knows after many years, this 95, it goes to 300 from 2008 to now. Right now, I don't know how much it is, but I didn't check. It's 300. So he understands that the market will go up again. This is the market, how it works. When there is a bear market, later the bull market will be excellent after a few years. but we don't know how many years the bear market will be. Okay, so always try to understand this. And excuse me. And this example I give you about Warren Buffett, who is one of the richest people in America, is just to give you his ideas that he doesn't make money from the market. He makes it from dividend, and this is why he is not worried. He will never be poor a poor person. Why? Because he has about $50 billion and his dividend are too much. Okay? And if the market is going up, he will be making more and more dividend, and he pay less tax than us. Okay? This is why you should understand that the billionaires are not looking really to make money from going up or going down, but they are making money from dividend, and this is why they keep all their wealth in stock market. Okay, so let's go back. So this is just an explanation of what I see, because if you are an investor, especially when you are young, let's say you are 20, 25, 30, 35, 40, even 40, 45. You are young and you are looking for wealth. You should look at least, as Warren Buffett said, at least 20 years. Look for the future. Just put money in the stock market and leave it. The market, even we have a bear market, it will go up into a good market. But it's not you buy when it's just begin to go down, you begin to buy. This is not a good way. You should wait until you see where this bear market is going, because it can take 6 months, 1 year, 2 years going down. So if you buy now, after 6 months, you will be losing a lot of money. Except where the bear market is not real and the stock market goes up again into a bull market, and there you can make a lot of money. So it depends. Okay? Now, Bill Muja, how are you? Thank you very much for coming. Hi, Karim. Is another way of him getting trusted information about the stock market. Now, listen, Bill Muja, what I explain here is my vision. If you are, for example, an investor, you continue investing for the whole life. Don't worry about fluctuation in the days or the months. This is what the big guys are doing. But understand that for them, they can make more money because they can put, for example, someone who has a business. He's making $10 million a business, or 20 or $50 million. He can take 10 million or 20 million each year and he put it in stock market. If he gets just dividend, he can live as a king without worrying about the market. Okay? But if you have just little money, in order to make money, you should do day trading or you should do swing trading in order to make more than the market is giving. Because if this year is a bear market, if you leave your money like this, you will be losing a lot of money. And this is what I am always explaining, as you should always think like this. Are you an investor or are you a trader? You should differentiate between yourself. If you have money and you want to build wealth, you should just buy and leave, and always buy, because investing is a habit, is a good habit. You have some stocks, you like them, even they're going down right now, but still you can in the future, if the market is reversing in a bull market, all the stocks that you bought, if they go up, you can make money because of the whole market. Okay? Thank you very much, Bill Muya, for your for coming. NASA said interest rate is the barometer. Yes, listen, interest rate has a direct thing to the stock market. Okay, because many years you see that interest rate is going up, going up, going up, going up, and this, a lot of investors, they want to have a percentage of 7% or 10% or 5% for their money, and they don't want to risk their money in the stock market. Because stock market, if this year, next year, 2019, if it is a bear market, understand that a lot of people, they lose a lot of money, especially when you have just little money. You don't have big money. Okay? So it depends on what is your idea. So you said, Clown Twitter account say, so the ETF that track treasuries will go to the moon. Yes. If the market is going down, you might see that the bond market is flourishing. It will be in a bull market because money of the stocks, it's coming to the bonds. You know, and things will flourish. But this, understand, it is not a sure thing. It depends on what the market is doing. It depends on how much this mutual fund are putting into the bonds market. Because it is another market. It's not the same market as stock market. Clown Twitter account said, we don't know how many times does Federal will raise it on the future. It may stop. Yes, it may stop, but if the guys are frustrated, mutual funds or investors are frustrated the whole year seeing no money, and now they are looking at the market is going down, and they see they begin to lose, they can decide to sell stocks and go to bonds. Okay? And this will have a very, very important thing on the market, but we will never know. So Vcash hold fast. He showed the trends going up, going down. Yes, it is. The market is like this these days, going up, going down, going up, going down. There is no big trend. Ugandan Knuckles, how are you? Thank you very much for coming. NASA, Death Cat Bounce. Yes, it could be anything. For me, always at 9:30, I try to see how the market is moving. If it is good, I go long. If it is short, I short. That's it. I don't care about trends right now because the market is so volatile, and that's it. Now, if someone buy leveraged ETFs and made double profit, it is also true that loss will be double. Yes, there are double and there are triple. If you don't know if this is double or triple, try to look first. If you want to make sure, try to go online and put this ETF on Google. You will see a paragraph and you read it. It will show you what it tracks, and it will show you if it is just the same or 2x or 3x. 2x, it means you make double the profit of the day. If it is 3x, you make 3 times. Instead of making $100, you make $300. If it is $300, you make $900. If it is $1,000, you make $3,000. This is, but it is up and down. Understand that. Understand it is up or down. So it is not. So it is both ways. So if you want to use it, those people who use it, if you have, for example, you want to magnify your profits, you can do that. But be careful. Don't play a lot with these, because if you lose, you will lose a lot. So you should know where to exit and don't lose too much. Before you do the trade, you should understand that $1, it will be $2. It will be $3. And anything is doublet or triplet. Okay? And yes, as you say double, there is also triple. And in order to know, just there are some ETFs you can know by itself. So I will just show you how to recognize them very quickly for those who don't know about ETFs. Okay, I will just show you with the explanation. You find ultra, okay, and you find ultra pro, and you find short. Now you can find this word short here, it doesn't matter. But when it is alone, for example, short the Dow, it means $1 good, $1 here. If you short, if the Dow makes, let's see, yes, if the Dow, oh no, I'm not speaking about. I'm speaking about going long, not short. No. Okay, so I'm mistaken in the direction. Now, if you find just let's see here. So you find the ETF. All are ETFs. ETF. And this is the index. Now the index ETF, okay, there is one ETF, you will find the name and it says the index ETF, you find it here. So if this ETF is making $1, the ultra you will make 2, the ultra pro you make 3. So always check ultra and ultra pro, and this it just gives you the index ETF itself. At least you will know, and all of them are ETFs, and this is just made by company. You can find, for example, pro shares, you can find A shares. This is the family that they make this ETFs. You can find other families. Okay, you can find S spiders. These are families. Family. What does it mean? Family. It means a company that make these ETFs. So they just made a stock ETF like this, and it is doublet. This ETF, it is triplet. You can find with the pro shares, I shares, and spider, and other names. You can find a lot. Okay, so this is what I want just to share with you guys. Now, Murat Kahraman, thank you very much, Kahraman, for coming. Thank you. Why the last 30 minutes started sell off and go down to open price? Algorithm, is it very interesting? No, listen. In order, Murat Kahram, in order to understand this, you should be a day trader. Okay, I will just explain. Very quickly this one. Okay, I will explain that. Now, let's say, for me, I give you an excellent thing. Always always the open at 9:30, this is the open, put a blue line and put the price of the open. Let's say the price is $20. This is the open. It means when just at 9:30 the market open. Okay? So the market and then can go up like this. It goes up. Then there is short sellers. They go down. Then it might be at the end. At the end of the day, they go up again. They cross, and then they stop, and then they go down, they go down. This is the play of the day traders. Day traders look where is the majority of the shares bought or. So here at the beginning, the buyers of shares, they are more buyers. Here, there are more sellers, sell short. These are short sellers. Now, if the buyers are buying, but the short sellers come and they push the thing, these buyers, they will sell also because they should sell because they go long. Now, when they sell, the stock go down very quickly. These buyers, they can change and they become sellers also. So sellers, the stock is going down, and then it stops. Now, when it stops, we have these short sellers, they buy back. It means they buy their shares they sold. And then they buy long. Other people come, and this is the game. So, if you are good at following the small trends, you can be a good day trader and you can make a lot of money. If you are not a good day trader, you should not do day trading because you don't know the direction of the day. Because in the day, when you see the day, you see a candlestick like this. See here. You can see like this. Now, let's say this is the open. This is the open. And the market has been going down for 1 hour, 2 hours, or 3 hours. But this is going down. Okay? Going down. And then it can stop and go up again until the high of the day, and then go down, and then this is the close. This is the close of the day. So when you see a candlestick, you don't understand how it works, but you should see the chart, whatever chart you take. For me, I like 5 minutes. This is what I like, chart. So each candlestick is 5 minutes, 5 minutes, 5 minutes, 5 minutes, 5 minutes, 5 minutes, until the end of the day. Because when you see, if you are just, you don't know day trading, you can see like this. See, you can see a day trade like this. It's a green. The whole day is green. Then you see a candlestick like this. Okay. But when you see the day, you don't understand what did happen. Where is the open, where it goes down, where it goes up. For example, okay? For example, here is the open. It opens low from yesterday. Let's say here is $20. It opens at 19.50 cents. But from 19 cents in the morning, it goes to 21. So in the morning, it was excellent. So you see that? It was excellent. But that's why in the morning you see it green. You see the candlestick, you see it green. But later, at 1 o'clock, for example, it go down, it becomes red, and it continues to go down. Let's say here, $18. and then it goes up again, and it stops at $19. It stops. This is the close. So you see that? So there is a big play. You should see the chart and you should follow the play each day. Okay? This is how we do it. So hope you guys who are watching how the day trade is. So on Monday, if you have time, if you are not working, please go in the morning at 9:30. Look at the stock market news in the morning. See what's going on. Futures, especially futures of the Dow, of the S&P 500 and the others. See what's going on, if it is good or bad. And then at 9:30, you should be there and watch the price. This is how you do day trading, and this is how you learn. I have a lot of techniques in training level 9 and training level 12. And I have made day trade on Twitter going long, although the day is bad, but I succeed to make money in the morning. And I have made another day trade with ETFs, 3x ETFs. It means you triple your, and I will show you how I do it in a video or two. So this is just how to do it. So if you are interested in day trading, you should take the training, begin practice, and whenever you are good at it, it's over. It means you begin each day making money from the market. And Murat Kahraman, it's not 30 minutes or 40 minutes or 1 hour or two. It depends. It depends. So don't look at the time. Look at the whole day, what's going on. From the beginning, 9:30 to 4. If you can spot when the stock stops going up or going down, you can make money. But you should be quick. You should have money to buy and sell, buy and sell. And it is not you buy and you leave. This is not a good strategy. If you just buy in the morning, you see the stocks are going down. You sell short and you leave it. This is not a good strategy. You should follow the stock until you exit. Now, whenever you exit, let's say you make money and you exit. It doesn't matter after what the market is doing, because you exit. Your money is not in the market, so don't worry about the market after you exit. But when you are in the market, you should watch your price. Okay? And there is no what we call algorithm or machines that are trading. No, these are real people trading, following the stocks, buy and sell at any time. And this is why they are in the market the whole day. This is their job, is to be a day trader. Okay? It's not you do a day trade once in a year, and you are not a day trader like this. Hello, free trader, you come late, but it's okay. Hello, Tesla. Thank you very much for coming. Oliver Blair, thank you very much for coming. Thank you. Tesla, why do you dislike Wall Street? They are doing business. No, I don't. Listen. The thing that you don't understand is that when you say Wall Street, is just in general people who make money. Okay? Some of them, we call them like mutual fund managers. Okay? They don't risk anything and they make money. And they make a lot of money. And the market go up or go down, they don't care because they are paid. But the market, if it is good for them, they will be making a lot of money. I told you before, Tesla, that one guy, I think 2 years ago or 3 years ago, he made as a salary $3 billion a year. Do you understand what does it mean, $3 billion a year? Because his account, it is, I think 1 trillion, or I don't know how many billion he has in his account. So this is his profits with his salary. Okay? When the market is good, they make them. There are other people who oversee stock market. In general, they are short sellers. They can put the whole market down as they wish, and you see the correction. Okay? And it's not they are bad or good. They are doing business as anyone, and it is a legal business. Okay? It's not they are stealing or no, they are in the market. You can do the same. If you know how to trade, you can do the same. You can each day sell short or go long, and you make money. But the thing is, they are very, very powerful. This is the main thing you can understand. Very, very, very powerful. They are not like having 100 million or 1 billion. These people can sell short hundreds of billions of dollars, thousands of billions of dollars. And when they do it, they make money because they force the market to go down. Like you see, for example, Facebook and Twitter in the last earning, not last earning, the other earning. You see how much they go down? Facebook go down $44. You understand what does it mean, $44 in 2 hours or 3 hours? And they sell short and they exit. It means they buy back and they exit. It means they are not anymore in the market. They go to sleep. They are not holding their money for tomorrow. They get them, their account is full of money at that night. They sleep as baby. Okay? So I don't dislike anyone. If you want to be in the market, you should be aggressive and you should do whatever you want. This is like a democracy where people are free. You can do whatever you want. You sell short, you buy long, you buy puts, you buy... It's your problem. Neither the government, neither Trump, neither your mother or your father, neither your brother or sister or friends will have a relation with what you do. Do whatever you want, man. So I am not against them. So always I try to answer your questions as I know. So I have no now what is it? Clown Twitter account, quick sir, please. Is the big green candle engulfed the previous? So green and red is just about the close of yesterday and the close of today. That's it. So it's very easy. And you should make your chart. If you are doing swing trading for many days, you should do that, because there are two settings. If you are, there is a chart, we have two settings. For me, I put the long setting, which is day after day after day. If the close of yesterday is lower, the close of today is higher, it's green. If yesterday is high and today is lower, today will be red. This is as simple as that. But some people in day trading, they don't look at the other days. They look for today. As I told you before, the open is the line that you should see. Okay? And this is why you can day trade very quickly, very good with the open. Okay? So that's the thing. Hello, no way. This is a new guy here. Thank you very much for coming. Wall Street are evil, and of course, the poor get exploited. Now, listen. Wall Street, they don't care. This is their word. It means it is you that you come to this world that it is troubled. Why you don't go to do another business? Why you come to stock market and you know it is difficult and you know it is very hard, like day trading? You should need more expertise to be like them. Because whenever you understand the price, you will be doing the same, and you don't say Wall Street are evil. Okay? You don't say they are evil because you will be doing the same. Now, why when the stock market is going down, why you don't sell short? If you are a day trader, why? Why you are always looking for long? Long, you should do it when you are an investor. So I will show you no way. Okay? So I will show you no way that investors don't look at the daily or monthly chart. They look at the yearly. They don't care what the market is doing, because whenever the market is going down, it will go up. I will show you no way, okay, about what's going on to the market. Dow Jones, for example, I will show you, okay, just right now. Please, no way, this is for you. So, look at this. Now, this is the daily. Now, we change to, let's say, to yearly. Okay? So, let's take these lines. Now, look at this. Okay. Now, this is the Dow Jones, like an ETF. I'm speaking about ETF. The ETF was $64 in 2009. This is 2008. Now, listen. See this 2008 when it goes down. Okay? So, Dow Jones opens at 132. It goes to 74. So, it lost about 50%. But it makes how many years to go up? 1, 2, 3, 4, and this is the 5th. This is where the market goes up. Now, 2015 was very low, but it continued to go up. 2017 was excellent. Okay? But this year is red. Now, we will never know that it will have 3 years like this. 1, 2, 3. Or it will go up green next year. So no one knows. So if you are an investor, okay? If you are an investor, you should be looking for years. You are not looking for days or months. Okay? So that's the deal. Okay, so let's go back. So hope no way, hope you understood what I say. So Murat Karaman, Wall Street makes money, buy cheap, sell expensive, SPY is like penny stock, pump and dump. Yes, you can tell that there is a big play. So either you play their game and you be with them, you do sell short, and you go long. The main thing you see how they do it very, very harsh is in the earnings. In the earnings, either they sell short or they go long. And they can make a lot of money in few hours. I told you about Facebook, $44 go down just in 2 hours or 3 hours. No way said, I remember last year one guy lost 4 million on the XIV in one day. Be careful. Yes. No, listen. 4 million or 10 million or 100 billion, this is on how much money you have and where you are. Some people also, they do crazy things. Let's say you buy 1 million $1 million puts before the earnings, just before the market close, you buy, for example, 1 million puts. Now, the next day, it is gap up. So you lose this 1 million. You lose it. There are a lot of people who do gambling in stock market. And sometimes they have no idea about diversification. They have no idea about anything. They just want to do, they want to make a lot of money in little time. This is how people, they can lose a lot of money. Clown with Twitter account, I can't trade inverse. No, listen. What if I have done a trade, a swing trade with inverse? It means shorting the market with inverse ETF for 6 or 7 days, Russell 2000, and I made a lot of money from it. Now, it depends what you are going to do. Are you going swing trading? Are you doing day trading? I understand. But if you go long always, you lose a lot because the market is down. Whenever you buy, you lose. Whenever you buy, you lose because the market is volatile. There is no trend. But when you see the market is shorted very strongly and you think it might go down, you can do that. It's always the same. So VCast, hold fast. You are putting small trend pictures like this. Please write something. Last time you write sentences, but today you are just doing charts going up, going down. So No Way said he asked the government for bail out Warren Buffett. So I have no idea about this story. So I have no idea about this. Tesla said, is there a short-term trends in bear market? Yes. I told you the week when it was so bad, I was in and I shorted. Okay? But understand that it should be better to do day trade than to do day trade than to do swing trade, because swing trading is difficult. So you should be always prepared to exit when things go wrong, and you should never leave the stock or what you short like this. And it's better to do it with ETFs, not with stocks, because stocks sometimes we have good news or earnings, and if you have a gap up, you will be losing a lot of money. Tesla said, can you give an example of for ETF times 3 from your own vision? Yes. It means ETFs 3 times. Let's three. Okay. 3 times. I have a. Let's see here. I will. I don't know if so let's see. Okay, so UDAO is 3x Dow Jones. It means if Dow Jones has made $1, this UDow you can make $3. This is I send it to you. But you can listen, Tesla. It's very easy. You just go online and you put ETFs, leveraged ETFs, and you will have all of them. There are hundreds. They are not only 1 or 2 or 3. There are hundreds. And understand, ETFs, we have thousands of ETFs. So for me, my students that are in golden subscription or silver, I give them just few. And I say to them, stay with the few, because there is no need to go everywhere. Just few. Okay? It will be very good. Aravind Soraya, thank you very much for coming. If you have a question, just ask. NASA said, leverage ETFs is like options. They magnify your profits and loss, so don't buy a lot. Yes, it means if you are crazy, you like big profits, and you are a day trader, you know how to day trade, I urge you to try them. If you are a good day trader, but if you are a bad day trader, so I urge you not to do so. Just buy a few and see the results. It's very good that if you don't have money, to just try and practice. Thank you, Murat Kaharaman. Thank you very much. So, as I showed you, UDow, it's a 3x Dow Jones. And you just go online and you find plenty of them. But always, this is my suggestion, opinion. Always go online and see what is this ETF that you are going to buy. Because sometimes I have a student, he's not a student, he tell us here, one time, I don't know if you remember, he has $12,000. He bought an ETF, but he doesn't know. He just see it going good. He bought it. It was about futures. He doesn't know about anything about futures. This ETF tracks futures. It doesn't track the stock market. He lost 90% of his money in one day. And he told me why. I say, because your ETFs is tracking futures. Futures are leveraged thing. So it's leveraged and you don't know this. So be careful when you want to buy. You do your homework first. Put these ETFs into your chart, a portfolio chart, and then look one after the other. What does it do? What does it tracks? Okay? So don't just buy and because they told you. No, you should check it yourself. Oh, you remember Nasa, that guy who lost 90%? He told me he has 12,000. I think what is left is only $2,000 or $1,500. This is because people, they want, this is just two things. Greed, it means you want more money in less time and you begin to gamble. Now, when you are a good trader, you know what you are doing. You see it doesn't work, you are a day trader, you begin to trade, it doesn't work, you exit right away. And then after a few minutes, come back and buy again. That is how do we trade. It means you should be averse, you should be careful about risk. It's not you buy and you leave. If, for example, you buy in the morning, you see the market is going good at 9:30, 10 o'clock, it is good. Okay, you just go out of your home, you go to work, at 4 o'clock you come and you find that it is a bad day and you lost a lot of money. This is not a day trade. When you want to do a day trade, you should be there. You should be watching. I have done mistakes like this and it cost me a lot of money. I see the stock is going good and it's going good. 11 o'clock, 12 o'clock, I have made a lot of money and then I just say, okay, I just leave it. The day is so good. Now, when I come back, I find that I lost a lot of money. I lost all my profits. And this, because for me, when I'm talking to you, I am speaking about my own experience when I day trade. It's very hard. So you should be responsible for your money. You should have money to trade. Whenever you see a danger, you exit. Because what is it you exit? You lose 100, 200 or $500, you exit. It's better to let the stock, and then you lose for $2,000, $3,000, $5,000. So you should be aware of the risk. Okay? And yes, Free Trader said, day trading is about not to lose your capital. Day trading is to take quick actions and change you adapt to price at any price. You should adapt. The market is going good, you buy. You wait 10 minutes, 5 minutes, 20 minutes, 30 minutes. It's going up, going up, going up. If you see money, you can exit at any time. Okay? Now, you buy the stock. It's good. 5 minutes. And then it stops. It's going down, going down. You lose your profit. And then you begin to lose. You should exit. Because if you stay and you say, let's see the 5 minutes, next 5 minutes, next 5 minutes, next 5 minutes, and the stock is going down and down and down and down, and then you look at your money and then you find that you lost $500 or $700. You should limit your money that you lost each day. If you are not good, if you are having problems with your wife or your girlfriend or a student or whatever, or you have problems in your job and you are not good to trade, do not trade. Because trading, you should be calm, you should follow the stock price. For me, training level 11 and 12, I give techniques how to assess the price, how to follow the price, and how to exit with a loss or with a profit, and don't stay there anymore. Bill Mujay said, those commissions keep adding up in any broker with a better rates than 4.95. Now listen, there are some brokers that have, for example, you can buy shares. Buy 100 shares, it is $1 or less. But understand that when you are doing day trading, you should have money. If you have only little money, whatever you do is always a problem. That's why I told you, you should practice with little money, you practice. But whenever you become good, you need money. This is what I told you every time, even in my training, even recommendations. It means even if you don't trade with all your money, put your money as for example, as a bank account. Let's say you have 10,000, 20,000. You don't want to trade all this. Okay, trade only 1,000, 2,000, and leave the others and add money, add money, add money. Whenever you are ready to day trade, you become a good trader and you need money. Because when you are a good trader, you don't have money, this is nonsense. It means it makes no sense. Who will give you 25,000 or 30,000 to trade with? And no one will give you money. And you can't borrow money to go trading. Trading, you should have your own money. Then, if you are good, you can use the margin account. If you are good and you make money for 1 year, 2 years, or 3 years, then you can use margin account. These are recommendations that I always tell you, because you should not play with the stock market if you are not good at it. The only time when you use the margin is when you are good, when the market direction is good. For example, the whole market is going into a bull market. It's good. It means all the stocks are going. whatever stake, most of the stocks that you take, you will be a winner. And you can make a lot of money. But if you don't know how to trade and you use margin, and then you will be losing 2 times or 3 times or 4 times, because they told me some people that 10,000, the broker can give you 40,000. They told me there are some brokers that give you this. But understand, if you are using $50,000 in day trading and you don't know how to trade, your 10,000 will go very quick. Commission and you don't make good trades, your 10,000 will disappear in 1 month or 2. So having money of other people is not a good way to trade. You do this when you are capable of making money of your own money first, and then you can do the other stuff. Okay? So we have been 2 hours. So right now I will be asking you more questions. If you have more questions, because we have 2 hours, and here is my website and my email for those who want day trading. You can see training level 11 or 12, or you can go to Golden and you find 13 training for free. So you can do that for free, and you find your training there. So you said, are those normal rates? Yes. 495 is the general thing right now. You can find less when you buy shares, not flat rate. So there is what we call, I will just explain this right now for those who want to know. Always try to see how your broker works. There are 2 things you can understand. There is flat rate. Flat rate, always you find 1 rate, whatever you buy. Let's say 495 is the standard right now. This is the standard. Wherever you go, you find this. But it's not, there are some, they ask you more, okay? They ask you 6 or 7 or 9, there are. But the normal rate is this. Now there is, you buy shares, by number of shares. Let's say if you buy 100 shares, it will be 45 cents. It means you are going to pay 40. But most of the broker begin with $1. It means if you buy 100 shares, your broker will have $1 commission. Now, if you compare it with this one, 495, it's 5 times multiplied by 5. So it's better for you to buy by shares. Okay. Now 200 shares. If it is 45, 200 shares also it is $1. 200 shares. But whenever you use $300 shares, it could be $1 something, and then becomes. But if you are buying 1,000 shares, this is not good, because 1,000 he will charge you $10 for buying. $10. It will be $20 for buying and selling. This is bad. This is bad. So try to see a broker, whatever you want. If you want a flat rate or you want buy shares. Okay. That's it for those who wants to know. Free Trader said, do you think these futures predict the trend of the stock market? Now, there are what we call indexes futures, like Dow Jones, S&P 500, Nasdaq, all these, they have futures. Sometimes yes, sometimes no. So in the morning, you can check the futures of the indexes. Don't see the futures of commodities and other stuff. Just indexes, and you will have an idea. But this idea, it's not a sure idea, because stock market is separate from futures. Okay, so don't make it as a sure thing, because if it is a sure thing, it will be easy. And any stupid person in the morning, he sees futures indexes are good, he will go long and he will be sleeping. This is not what I recommend. Okay, so don't think that stock market is so stupid and you can outsmart the market. No. Bill Mujah said, I asked earlier about how can I get some reliable information regarding the stock. Now, what information are you looking for in a stock? Reliable. What do you mean by that? Because Bill Mujah, I don't understand what do you mean by reliable information. What does it mean? Are you going to invest for the long run, or are you going to do day trading? So I have no idea what you are talking about. So please write a complete sentence, please, Bill Mujah, or send me an email. I can explain later what is it. Okay. So what I told you guys is always please watch my videos on YouTube, and please share my videos to if you have Facebook pages or other kind of things, just share my videos, and thank you very much for doing that. And try to focus on next week. It might be having a clue next week. If the market is good next week, we go to a correction and maybe we go long to have a bull market. But if things collapse, understand that the bear market is still there. Okay? Frontiers, man, how are you? You come late. So what I ask you, Frontiers, man, because you come late, if you have some questions you could ask, or you can watch the 2 hours that we have done right now. You can watch it because I have explained a lot of things about the market, about a lot of things, and so on. Bill Mujah said, TV seems to manipulate things. No 4-day training. Thank you. Now, listen, Bill Mujah, I don't understand. One time you speak about TV to manipulate things, and then when you say no 4-day training. What is this 4-day training? I don't understand. So could you make sentences to explain to me what do you mean by 4-day training? What's this training that you are speaking about? Now, for TV to manipulate things, yes. TV is to make you connected and waiting for what they say, and they can show ads and they can make money. The more people we have TV, the more they can make money. I can show you this into this explanation to understand, because those people who don't have an idea about how TV works, I will tell you. Websites or TV, it's the same thing. So listen here. We have TVs that are very famous. How does TV make money? They need large base of viewers, large base of people who watch. It means viewers. Okay? The larger we have, the more TV makes money. Now, because they have large base, let's say a TV has 100 million watching at 9:30 a.m. for the news. Just an example, okay? Now understand that people, the companies that advertise in TV, they pay too much. They will pay too much for this 30 seconds. 30 seconds. They pay too much. That's why TVs, they get more money. So they want, so the manipulation comes when the people here, especially when it is Wall Street. Now, when Wall Street guys come to speak, okay, they give you good things. Either they tell you, oh, the market is good, or the market is bad. If it is good, they ask you to buy. If it is bad, they ask you to sell. And both ways, the Wall Street guys, they make profit. If they say go up, it means they bought here and they will sell here. Now, if they sell you sell, they sell with you here and they buy back here and they make money. So both ways they make money. That's why those people are making a lot of money. So TVs and websites also. It's not only TVs. There are some websites that are very, that has a large base of viewers. And as they go to TV, they go to websites. It means even if it's the same. Like for example, CNN, it has a website and it has TV. So whenever you watch, they can make money. They make money because of these ads. It's like Google and Facebook. They make ads. That's why they make money. So there is, yes, there is manipulation as always. Okay? So Bill Muir said, I was asking how you get reliable information regarding the trade. Oh, how I get reliable? It's just the price. Techniques that I use. You can check training level 11 or 12. Just the price, how it moves. I made a day trade on Twitter, and I made a day trade on ETF. I put them in golden subscription or silver subscription. You will see how I trade. It means I will just show you why I bought here, what I am doing, why I sell here, why I buy here. This is the training. It means you just know how I can spot the price. Okay? So that's it. JCCC, thanks for the information. Just can't understand if it is near a bear trap or not. I would appreciate your comments. Now, JCCC, I have explained this in the beginning 2 times in the beginning of this in this live session, but for you guys, this is I will do it the last time because it's 2 hours 30 minutes. So JC, try right now. I will explain to you how to look at the whole market and how to see if you are in a bear or correction, or I will do it again for you guys. Now, let's see. Day trade is okay. Look at the Dow Jones. Let's say I remove this. Now, please, since you are looking, we put this line, which is the resistance line, and the high of the year, which is the last day. It was 26th of January. This is the high. Let's see the high here. 260 to 93. Okay, yes. It is Friday. 26th January 2018 is the high. This is the resistance line. Now, after that, we have the correction going down. It means correction. It means there is a big sell-off until 9 of February. I put a line, and this is the support line, which is the correction line. This is called correction. Between this blue line, I will take this from you. Between this blue, this is red. So this is the correction. Now, if the market goes up above this blue line, it will be a bull market. Now, if it goes below, like now, it goes below, we are in a bear market. Now, but there is a reverse. The bear market, we enter the bear market, we are still in the bear market. That's why I told you. On Monday, try to see. You can see two things. Either the market crosses the line and we will be in the bear market. If it continues and crosses this line, we will be in a bull market in 2019. Now, what if tomorrow, on Monday, it goes down again? If it crosses this line here, which is the low of the year, if it crosses, we will be in a bear market for true. And if it continues to go down, we will be in the bear market. So that's the deal. So for you, put in your mind these two lines. In these two lines, you can just make a picture or screenshot today or tomorrow and keep this in your computer, this picture, and watch. Another thing to do is follow me on YouTube each day, because whenever something happen very good, I will explain. I have explained this 2 days ago, 1 day ago. I will explain it. So don't think because we have two green candlesticks that we have a bull market right now. No, we are still in bear market. I know the bear market from the red line. This is my own explanation. You can go to someone else explain differently. Okay, so I explain it like this. Thank you very much. Okay? So, Frontiers man, you say, I am Mert. How are you, Mert? And I have good news. I found another CFD broker which offers stocks, so I don't have to day trade the Dow Jones anymore, which is good. I say this on chat because you are live. Thank you very much, Mert. And as you and I, you are always chatting with me by emails, which is very good. Thank you very much. But listen, there are some. If there are stocks, are they still CFD or they are real stocks? If they are just CFD, it's okay. Frontiers, just to notice, because I was about to write a reply to your email, but I can't see that I can reply directly. Have a good night, Karim. Speak to you soon. Thank you very much, Mert. What is the value of the bottom, the bot and bottom? Now listen. I don't understand what you mean by bot and bottom. What do you mean by that? You mean the low of the year? So JCCC, please try to answer my question. The value, it is just the high of the Dow Jones. Okay, I will give you with the index, because what I show is the ETF, which is better, because if you want to trade it, it will be very easy. But if you want Dow Jones, I will tell you Dow Jones. Okay. So I will show you the Dow Jones. So what you should do to know, this is the Dow Jones, okay? The high of the year is this one. Try just to write it. It's 26 January 2018. And the high of the day is 26,616 and 71 cents. You just click, if you have the chart, just click on the 26th of January, you will have all the information. The high is 26,616.71 cents. Now, what is the low? The low is the 9th of February. It is 23,360.29 cents. So you just do what I ask you to do, and it will be very easy. Or if you have been mistaken or something, you can send me an email, and then I can answer you again. Okay? So JCCC, I think I have answered your question. Bill Bilmuya said, does that moving average can tell you about their market bull market? Now listen. Stop asking me about this moving averages, because whenever you change the day, the number of days, whenever you change, the chart change. That's why it is not reliable for me. I don't use it, and I don't have to use it. Okay? So please, no moving averages for me. Frontiers say, have a good night. Thank you very much. Now, here is my website and my email for you guys who want to send me an email. If you have some issue, or you have stock, or you have something, you can send me your email and we can discuss that. So it is 2 hours 22 minutes, and it is the end of this live session. Thank you very much, all of you guys who have been very good to ask questions and to get answers. Now, please follow me on YouTube always, and share my videos to wherever pages you have, Facebook or Twitter or whatever. And follow me, because whenever I do a video, I give some piece of information. Because sometimes when you comment on the video, I don't see that much the comments. So send me an email, it's better, because you get an answer very, very quick. Okay? So thank you very much, all of you guys. Nasa Nanochi, Oliver Blair, Nasa. And since we don't see each other until the new year, so happy new year. And I will make video about this. And if you are in holidays, enjoy your holidays. Don't worry about the market anymore. And whenever you are on Monday, please watch Monday, because it will be a very bad Monday. I don't know if very good or very bad. So we will see that. So thank you very much all for watching. Send me an email if you need me. Thank you very much, and have a nice night. Thank you.